7 reasons inflation is a major challenge for the U.S. economy today. Hey everyone, it's ASDXWQDQ here. Today we're diving into inflation, a topic that impacts all of us. Inflation is a global issue, and here in the U.S., it's throwing some serious curveballs at our economy. Over the next few minutes, we're going to break down 7 key reasons why inflation is such a big deal and how it's affecting our lives. The shrinking dollar, how inflation impacts your purchasing power. Let's start with something we can all relate to, our hard-earned money. Remember that awesome t-shirt you could snag for 15 bucks a while back? Well, thanks to inflation, that same shirt might cost you 20 bucks now. As prices climb, your money just doesn't stretch as far as it used to. This decrease in purchasing power has a ripple effect throughout the economy. When people feel like they're constantly losing ground, they start to tighten their belts. Those everyday purchases, the ones that fuel our economy, start to take a back seat. That new phone you've been eyeing, suddenly it feels less essential. And as more and more people hold back on spending, businesses feel the pinch. If fewer people are buying those cool sneakers or going out to eat, stores and restaurants start to struggle. They might have to cut back on staff, reduce inventory, or even close their doors. The economy is this intricate web of interconnected things. When one part of the web weakens, the whole structure becomes a little less stable. It's about families having to make tough choices between putting food on the table and keeping a roof over their heads. Businesses, especially small businesses, are feeling the squeeze too. They're facing rising costs for everything from raw materials to shipping, and it's getting harder and harder to stay afloat. Some are forced to raise prices just to survive, which can lead to even lower demand and a vicious cycle of economic instability. Understanding its impact on our purchasing power is the first step towards finding solutions. We need to talk about it, demand action from our leaders, and support policies that promote economic stability and opportunity for everyone. The rising tide, how inflation is driving up the cost of living. Now let's talk about something that hits even closer to home, the cost of living. We're talking about the essentials, putting a roof over our heads, food on the table, and gas in our cars. Inflation is making all of these things increasingly expensive. For many families, especially those living paycheck to paycheck, this increase in the cost of living can be devastating. It means having to make impossible choices. Skip meals to keep the lights on, forgo essential medications to afford rent, or fall behind on bills to put gas in the car to get to work. It's a vicious cycle that traps people in a spiral of debt and financial insecurity. The rising cost of living also has long-term consequences. For young people, it means delaying dreams of homeownership, starting a family, or pursuing higher education. For retirees living on fixed incomes, it means watching their savings dwindle as they struggle to keep up with rising costs. We need policies that address the root causes of inflation, protect vulnerable populations, and promote economic opportunity for all. We need to invest in affordable housing, expand access to healthcare and education, and create good-paying jobs that allow people to keep up with the rising cost of living. The uncertainty factor, how inflation is impacting businesses and the economy. So we've talked about how inflation affects you and me, the everyday consumers. But what about the businesses that make our economy tick? Well, let's just say inflation is causing them a whole lot of headaches too. Imagine you're a business owner. You're trying to plan for the future, make smart investments, and keep your employees happy. But with inflation soaring, it's like trying to hit a moving target in a windstorm. Prices for raw materials are all over the place, shipping costs are skyrocketing, and you're never quite sure what to expect next. This uncertainty makes it incredibly difficult for businesses to make long-term plans. Many businesses are forced to make tough choices, raise prices to keep up with rising costs, cut back on investments to protect their bottom line, or even lay off workers to stay afloat. Small businesses, the backbone of our economy, are particularly vulnerable to the whims of inflation. They often lack the resources to weather economic storms and are more susceptible to fluctuations in consumer demand. When small businesses struggle, entire communities feel the pain. Okay, so we've talked about how inflation impacts our wallets, our lives, and our businesses. But what about the folks trying to get a handle on this whole situation? Enter the Federal Reserve, often referred to as the Fed, the guardians of our monetary policy, the wizards of interest rates. Think of interest rates as the cost of borrowing money. When interest rates are low, it's like borrowing money at a discount. It's cheaper to take out loans, buy houses, and invest in businesses. This can stimulate the economy and encourage growth. But when inflation rears its ugly head, the Fed often steps in and raises interest rates. Why? Well, it's kind of like putting the brakes on a speeding car. Higher interest rates make it more expensive to borrow money, which can slow down spending and hopefully bring inflation under control. But here's the catch: raising interest rates is a delicate balancing act. Too much, too fast, and the economy could screech to a halt, potentially leading to a recession. Too little, too late, and inflation might spiral out of control. So what does this all mean for you and me? Well, when the Fed raises interest rates, we feel it in a few key ways. First, our credit card bills might get a little scarier. Second, buying a house might become more expensive. And finally, saving money might actually become a little more rewarding. The key takeaway here is that the Fed's actions to combat inflation, while necessary, have real-world consequences for all of us. Okay, let's talk about the future, specifically our financial futures. We all have dreams, right? Maybe it's retiring early, buying a dream home, or traveling the world. To achieve those dreams, we work hard, we save, we invest, we build our nest eggs feather by feather. But here's the thing about inflation: it's like a silent thief, slowly chipping away at the value of our hard-earned savings. Remember how we talked about purchasing power? Well, inflation doesn't discriminate. It erodes the value of our money, whether it's tucked away in a savings account or invested in the stock market. Let's break it down. Imagine you have $1,000 in a savings account earning a measly 1% interest. If inflation is chugging along at 3%, your money is actually losing value over time. You might be earning a little bit of interest, but your purchasing power is shrinking faster than your savings are growing. And it's not just savings accounts. Inflation can also wreak havoc on our investments. Stocks, bonds, real estate, they're all vulnerable to the erosive effects of inflation. While these investments have the potential for higher returns than savings accounts, they also come with higher risks. And when inflation is high, those risks can feel even riskier. Now, I'm not saying we should all abandon our savings and investment plans, but we do need to be smart about how we protect our hard-earned money from the silent thief of inflation. So, what can we do? First and foremost, we need to stay informed. Pay attention to inflation rates and how they're affecting the value of your savings and investments. Second, consider diversifying your investments. And finally, don't be afraid to seek professional advice. All right, let's talk about a term that sounds like something out of a sci-fi movie: the wage price spiral. It's a bit of an economic head-scratcher, but trust me, it's something we all need to understand. When prices go up, workers naturally start demanding higher wages to keep up with the rising cost of living. But here's where things get tricky. When businesses have to pay their workers more, they often pass those increased costs on to consumers in the form of, you guessed it, even higher prices. And when prices go up again, well, you can see where this is going. It's a vicious cycle, a spiral, if you will, where wages and prices keep chasing each other upwards. This wage price spiral can have some pretty nasty consequences. First, it can lead to runaway inflation, where prices spiral out of control, eroding purchasing power and creating economic instability. Second, it can hurt businesses, especially small businesses that might not be able to absorb rising labor costs without raising prices or cutting back on other expenses. And finally, it can exacerbate income inequality. Breaking the wage price spiral requires a collective effort, a commitment to fairness, and a recognition that a rising tide should lift all boats. So, we've covered a lot of ground: the shrinking dollar, the rising cost of living, the uncertainty for businesses, the Fed's balancing act. The big question is, can we get inflation under control before it derails the U.S. economy? Persistent high inflation can have a corrosive effect on an economy. This can trigger capital flight as investors seek safer havens for their money. High inflation can also discourage investment, stifling innovation and job creation. Addressing inflation requires sound monetary policy, responsible fiscal policy, and structural reforms. The fight against inflation is a marathon, not a sprint. So there you have it, 7 reasons why inflation is a major challenge for the U.S. economy. It's a complex issue with far-reaching consequences, affecting everything from our wallets to our livelihoods. But it's not a lost cause. By understanding the challenges, engaging in informed discussions, and demanding action from our leaders, we can navigate this economic storm and build a stronger, more resilient economy for all Americans.